Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello my dear students, welcome back to First Commerce Accountancy online classes. Dear student, in the previous class we discussed about the concept called cash book, correct, right? In that we learned simple column cash book, that is what single column cash book, double column cash book, and we solved many illustration on that concept. And the next one is petty cash book, that is a three types comes under cash book. Okay, so this chapter relates to subsidiary books, how to maintain subsidiary books instead of recording all the transaction in the journal book, correct, right? A large organization usually maintains the subsidiary book instead of that journal book, because when number of transactions are there, it is difficult to maintain or record each and every transaction in the journal. So that's why many organizations prefer to prepare subsidiary books, that is what cash book or any to record all cash transaction they will maintain cash book, and to record all the credit transactions they will prepare other subsidiary books and all. Let's see the types of subsidiary books. Subsidiary books, okay, in that we can easily classify this into two types, that is what cash, for easy understanding purpose, cash book and non-cash book, okay. So in that cash book we learnt three main types, that is what simple, double and petty cash book, okay. Let's discuss non-cash book subsidiaries. I told that to record all the cash transactions, organization maintain these cash books, okay. In that they can record all the transactions which relates to cash, and even in that cash transaction, even bank transactions also recorded in that cash book itself. To record small expenses, they can maintain petty cashier, and petty cashier prepare petty cash book. Okay, then where we can record all credit transaction, whether a firm only allows cash transaction? No, it is necessity to attract the customers. Organizations have to give some of the credit facilities to their customers, correct, right? So for that reason, as per this subsidiary books or this cash book, we cannot record credit transaction in the cash book, okay. So where we can record this credit transaction, okay. So to record credit transactions, organizations maintain separate subsidiary books. It means to record credit purchases, they can maintain purchase book, and to record credit sales, then they should prepare sales book, okay, and sales return book, okay, and even purchase return. And those transactions which cannot be recorded under the subsidiary books are recorded in the separate book called journal proper. In that usually purchases of or sales of, not purchases, sales of fixed asset, that is on credit, are recorded in that journal proper, okay. So non-cash book are, first one purchase book, sales book, and purchase return book, purchases book, purchases returns, and sales returns book, and one more journal proper. See the spelling properly, JOURNAL, journal proper. And here in this purchase book, accountant or organizations can record all credit purchases. For example, goods purchased from Ram on credit or goods purchased from Lakshman. Such transactions are recorded in this purchase book. And sales book, all credit transactions, all credit sales, goods sold to X, goods sold to Y on credit. Such transactions are recorded in this journal, in this sales book. And the next one is purchase returns book. Here purchase returns book, all returns from the customers are recorded in this purchase returns, and here sales return, all returns to the supplier are recorded in this sales return, and which transactions are not possible to record in this subsidiary books are recorded in this subjournal, that is called as journal proper. Okay na? So these types comes under non-cash book. Let's see the format of, let's discuss one by one this purchase book, how to solve the illustrations relates to purchase book. These are very simple, and from this 6 marks and 12 marks questions will come. 6 marks and 12 marks like prepare purchase book from the following transactions or prepare sales book from the following transactions. Such questions relates to 6 mark, and 12 marks oriented questions will be like this: prepare proper subsidiary books by following transactions. So in that type of illustrations you have to prepare all the subsidiary books by classifying the transaction. This comes under purchase or this comes under sales, like that. Let's discuss one by one. So first subsidiary book under first one, purchase book. And before that we have to know some rules of these subsidiary books. Rule number one, here all credit transactions are recorded, all credit purchase and all credit sale. Here we cannot record cash transactions. Say for example, in the illustration there are number of transactions are given. In that one transaction is like this: goods purchased for cash. Can we record that transaction in this subsidiary books? No. In this purchase book we cannot record such transactions, because according to this rules of subsidiary book we cannot record cash transaction. Only credit transactions can be recorded in this purchase book or sales book or purchase return or sales return, and even journal proper. So to record cash transactions we will maintain separate book that is called what? That is called as what? Cash book. And only transactions are related to goods are recorded. Say for example, goods means what? In which your business is dealing. Say for example, you are running or you are managing or you started sale of fixed assets like furniture or machineries. Then that assets, you actually that furniture or machineries or any other loose tools are considered as what? Asset. But for you that is considered as goods, not asset. Okay, in which business is dealing, that are recorded in this purchase book or the sales book or any other subsidiary book except the cash book and all. So in which trade discount will be deducted, and GST and other charges, say for example transportation charges or packing charges or installation charges are added to the concerned expenses. Okay na? So let's see the format of purchase book. Format of purchase book, very important guys, and very simple. We can easily understand these concepts and we can easily score 6 out of 6 and 12 out of 12. So first one, date, and the next one to record invoice number, and the next one is the main column to record name of supplier. See here we have to write name of supplier. Just we should mention name of supplier, and in bracket we have to write account to be credited. Account to be credited. Okay, and the next column for amount in rupees. Amount in rupees. And here we have to record date and here invoice number. Invoice number. Here, suppose invoice number is not given in the illustration, then we have to write invoice number like 1, 2, 3, 4. Okay. So based on the transactions, we have to write the serial numbers. If invoice number is not given in the illustration, then we have to record date, then name of supplier. Say for example, goods purchased from X. Then who is a supplier here? Who is supplier? X is considered as supplier. From X we purchased goods, so X is considered as supplier. So just write X, and here if invoice number is not given in the illustration, then write 1 and mention date and write amount, and the next one is totaling. And if any cash transaction is given in that illustration, then for that transaction we have to give note. Here we should not record that transaction in this purchase book or in this subsidiary book. Instead of that, we have, after totaling this purchase book, we have to give a note for that transaction. Means transaction dated on this date, dated on XXX, will appear in cash book or journal proper or any other book. Got it? So this is a format, and write here heading purchases in bracket journal. It is also called as journal, correct, right? Subsidiary books also called as what? Journal books. So purchases in bracket journal book. Okay. So date, invoice number, name of supplier, in bracket account to be credited, and amount, that is in rupees. See, you have to score out means to score 6 out of 6. You have to complete the format like this, proper column, and you have to mention, suppose invoice number is not given, then 1, 2, 3, and properly you have to record date also. Let's start to solve some illustrations relates to purchase book. Only just by solving 1 or 3 illustrations we can easily understand how to prepare this purchase book. Got it, right? So okay, let's start. See, already I gave some illustrations relates to this purchase book or this subsidiary books. Just see the question. Here I directly solve the illustration. Clear? So purchase book, and the question is like this: enter the following transaction in the purchase book or journal of Miss Jain Traders. Okay, and the transactions are like this: dated on 2017 Jan 1, purchased goods from Mr. Suresh. See, the question is like this: purchased goods from Mr. Suresh. Mr. Suresh. See, goods from Mr. Suresh. According to the format of purchase book, we have to record or we have to write the person name, who is the seller name, supplier name. We have to write in that name of supplier or particulars column, correct, right? So here who is seller? Here Mr. Suresh is seller. Okay, see, I draw the format once again, and this is question number 1 under purchase book, and heading purchases in bracket. I told that you have to write journal book, and first column to record date, and next one to invoice, and next one to name of supplier, and the small column to record LF. So date, invoice number, name of supplier, account to be credited, and next one LF, and next one for MO. Okay, and the first transaction is like this: purchased goods from Suresh. So question, see the question, enter the following transaction in the purchase book, in the purchase book. So they clearly given what we have to prepare. We have to prepare, now we have to prepare purchase book. So purchase book format is this. This is the format of purchase book. So we know that how to record or how to start the solve this purchase book. So date 2017 Jan 1st. Here the thing is, here invoice number is not given. Invoice number is not given. So I told that if invoice number is not given, then we have to write the serial number 1, 2, 3 like that. So first one, purchased goods from Suresh. Here we need not write the sentence like this, just we need person name. So Mr. Suresh, just Mr. Suresh, and rupees 10,000. So direct amount in amount column 10,000. If any discount is given or any other additional charges is given, then we have to calculate, somehow we have to calculate, but there is no such issue. Directly they are given as purchased goods from Suresh, 10,000 amount is given. And see the next one, January 9, credit purchase from Santosh for rupees 20,000 and less trade discount at 10%. See, when we purchase, trade discount is also given by the seller. So what we have to do, we have to deduct that amount. So the next transaction, purchase from Mr. Santosh. Okay, Mr. Santosh, and at 10% discount, 20,000 and 10% discount. How we can calculate discount here? See, we have the next one, January 9, Mr. Santosh, rupees 20,000. We cannot write the amount in outer column because some calculation is there. Trade discount is allowed. So 20,000 in inner column, in this column only, and here below that write less trade discount. Trade discount at 10%. Trade discount at 10%. How we can calculate 10% discount? On which amount? 20,000 into 10 by 100. How much? 20,000 into 10 by 100. Calculate the amount. 2,000 is the discount amount. Correct, right? 20,000 into, on 20,000 10% discount. So 2,000 discount is received by the supplier or from the supplier. Correct, right? So the next amount less, we have to deduct 20,000 minus 2,000, 18,000 in amount column. Clear now? How to calculate? Now you got it? How to calculate this discount? Correct, right? So write the amount in inner column and write the and then calculate the percentage. Write amount here and final amount in outer column. And next, see the next one. See the next one. January 11, purchased from Mahesh Traders. Purchased from Mahesh Traders. We know that when person name is given, purchased from, when person name is given, then that transaction is considered as what? Credit transaction. So just write Mr. Mahesh, transaction dated on Jan 11. There is no discount or any other charges. Just write the amount in amount column. So we covered third transaction. See the next one. On January 16, purchased office furniture from Bangalore Furniture. See, I told that if you purchased these fixed assets like office equipment or furniture or building, purchased on cash, all are recorded in cash book, but these assets are purchased on credit, then these are recorded under journal proper, not in this subsidiary books, not in this purchase book. Clear now? Or if we can record only goods, means only credit transactions of goods, not credit transactions of fixed assets. So we have to give, here we have to give a note for this transaction. Transaction dated on January 16 will appear in journal proper, because this transaction, why? Because this transaction is relates to purchase of fixed assets, like this comes under purchase of fixed assets. So according to our knowledge, this purchase of these fixed assets comes under journal proper, not in this purchase book. Clear now? So okay. And the next one, Jan 26, bought goods from Girish. Bought, purchased, these all are the same meaning. So bought goods from Girish, transaction is like this, bought from Girish, and less 5% trade discount, 5% trade discount. So how we can calculate this? Bought from Girish, we have to write the person name first. Jan 26, Mr. Girish, amount in 28,000, actually 28,000, write amount in inner column, not in outer column, because we have to calculate discount, right? So how we can calculate? Below that, write less trade discount at 5%. How we can calculate? 28,000 into 5 by 100. So what is the amount? 1,400. Calculate this. 28,000 into 5 by 100. So 1,400. So what is the next step? How we can we write 1,400 here? No, we have to deduct this 1,400 from this 28,000. So 28,000 minus 1,400, 26,600. Now just analyze all the transactions, whether we covered all the transactions or not. First one, yes, 10,000, 20,000 less trade discount, 8,000, then 15,000 that comes under journal proper, not in this book, and purchased 28,000, and we calculate trade discount and recorded the amount also. So the final step is totaling. So total, see here 10,000, 18,000, 28,000 plus 8,000 plus 26,600. So 62,600 total purchases. So and the next final close account, we have to give a note, transaction dated on Jan 16 will appear in journal proper. Got it? How to prepare purchase book? By following transactions or by following information, how we can easily prepare purchase book. Very simple. Just see give concentration on format and this procedure, and how to calculate trade discount and all. If invoice number is not given, then we have to write serial number, and we have to properly record date and amount. Final step is totaling. And the next, suppose if any cash transaction is given or any purchase of fixed asset is given, then we have to give note for that transaction. For this note also you can score 1 mark, means this for this note 1 mark is there. So this also very important to score 6 out of 6. Clear now? Okay, let's move to solve one more illustration on this purchase book. Okay, let's move to solve the second illustration. Very simple. See the question first. Enter the following transaction in the purchase book of Samarth traders. So in the books of Samarth we have to prepare purchase book. So write Samarth traders. Samarth traders. Below that purchases journal book. Draw the format neatly. They use scale and pencil to draw the lines. Okay, date, invoice number, name of supplier, account to be credited, LF and amount in rupees. Now see the transactions. 2017 January 1st, purchased from Mandya Sugar Mills 10 quintals of sugar at rupees 3,500 per quintal. See, we have to calculate the amount here, because they purchased 10 quintals of sugar, pack means 10 quintals of sugar at rupees 3,500 per quintal. Then we have to multiply that 10 into 3,500, how much? And we have to write the amount in amount column. Clear now? So the question is like this. See the transaction once again. Purchased from Mandya Sugar Mills 10 quintals of sugar at rupees 3,500 per quintal. See the first one, 10 into 3,500 sugar. Okay. So now we have to write supplier name, correct, right? So date 2017, February 1, Feb 1st. Invoice number is not given here also, see that. And so for that reason we have to write serial numbers. So the next one, we purchased from Mandya Sugar Mills. So Mandya Sugar Mills is the supplier name. Sugar Mills. What we purchased? We purchased sugar, means Samarth traders purchased sugar. So in bracket 10 into 3,500. So how much? 35,000. 35,000 amount in amount column. Clear now? So the next one, see the next transaction. Feb 10, bought 25 quintals of rice from Bharat Mills, Belgaum at rupees 3,000 per quintal and allowed 10% discount, and we received 10% discount, they allowed 10% discount, like that. So the next one, Feb 2, second one, who is the supplier? Bharat Mills, Belgaum. We purchased what we purchased? We purchased rice. So 3,000, 25 quintals. Per quintal they paid 3,000. So how much? 25 into 3,000, 75,000. We can't write amount in amount column because we have to calculate trade discount like previous one. So less trade discount at 10%. So 75,000 into 10 by 100, 7,500. So now 75,000 minus 7,500, 67,500 in amount column. Any confusion here? No, right? So here in this one we purchased 10 quintal and per quintal 3,500. Per quintal how much? 3,500. In the next case we purchased 25 bags, means 25 quintals, and per quintal we paid, means Samarth traders paid 3,000. So 25 into 3,000, 75,000 less trade discount, amount in amount column. And next one, bought furniture of rupees 15,000 from Modern Furniture on credit. I told that if we purchased any fixed asset that is on credit, We can't record that transaction in this one. Instead of that, we can record that transaction in journal proper, not here. For that, we have to give a note. At the end of the illustration, we have to give a note for that transaction. So leave it. And Feb 25, bought wheat, because these Samarth trader is they are trading these items like wheat, rice or any other items, not the fixed asset. Fixed asset, for them this fixed asset, this furniture is considered as fixed asset, not goods. Correct, right? So the next one, 25, on 25, Feb 25, what the third one, bought wheat from Akhil and Company. From Akhil and Company. So Akhil and Company is considered as supplier or seller. So write the person, means company name, Akhil and Company. What they purchased? Wheat. How much? 15 quintal. At what rate? 15 quintals, 2,500 per quintal and allowed 8% trade discount. So very simple. How much? 15 into 2,500. See, 15 into 2,500, 37,500 in this column only, 37,500 and less trade discount. Less trade discount at what? At 8%. So 37,500 into 8 by 100 into 8 by 100, 3,000. So now 37,500 minus 3,000, 34,500 in this amount column, 34,500. And the next one, purchased 5 tins of coconut oil from Mangalore stores. From whom? From Mangalore store. So Mangalore store is considered as what? Seller or supplier. So just write fourth one, Mangalore suppliers or Mangalore stores. Mangalore stores. 5 tins at what rate? 2,000 per tin. 2,000 per tin. So how we can calculate? 5 into 2,000. So 10,000. In amount column, no trade discount and all. So just write the amount in amount column. Calculate the amount, write the amount in amount column. So now what is the next step? So totaling. So write total here. We covered all the transactions. So last step is total. Then we have to give a note for that, for one transaction, that is what they purchased fixed asset. So now 35,000 plus 67,500 plus 34,500 plus 10,000, 1,47,000. That is total purchase. And after completing this, we have to give note for what? Transaction dated on Feb 20 will appear in journal proper, because that is considered for the Samarth trader, that transaction is considered as purchase of fixed asset. They are not dealing in fixed assets, so that's why we cannot record that transaction in this purchase book. Clear now? I hope you understood how to solve purchase book by the information, by understanding the information. Only credit transactions are recorded in this transaction. Thank you for watching this video.
Don't forget to like our video and subscribe our YouTube channel for all the updates.